I think we're live and I think we're good to go. So, hello everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Sentiment team and community members discuss the recent crypto market events from more of a fundamental perspective. So, using a variety of on chain and social as well as development indicators all around or all focused on our platform. So, if you haven't used Sentiment before, what we do is we develop custom tools, metrics, strategies, and indicators by leveraging a variety of data sources, not just pricing data. What we really specialize in is on chain social media and development information. And we use this information to help you better understand the crypto market and the behavior of its various participants. So I strongly suggest checking out sentiment.net after or during the call, especially if you like what you hear, and also joining our Discord because we talk about these sort of things pretty much every day on our Discord channels. So the link to that is also going to be in the description of this video. So today's call is going to be focused primarily on the three coins, that is Bitcoin, Ethereum, and Binance coin, because there seems to be some growing hype about BNB and Binance as a platform in general in the past couple of days. So most of today's talk is going to be focused on the social on-chain and development activity of those three coins, with a bit of additional altcoins sprinkled in between. So if we're all ready, Brian, I think we can start with you. You can share your screen and we'll take it away.
All right, thanks, Dino. Okay, so we're going to kick this off with a little recap of a new Sandsheets template that we just made. This is showing the price returns of the top 100 blockchains over the last 7 days, as well as over the last 90 days. We chose these intervals because 7 days is typically a nice little time window to look at short-term trading options out there, and 90 days is more on the mid to long term. So what we did here is we simply took all of our projects and we looked at their percentage changes over the last 7 days and 90 days, ranked them by market cap. We also saw we have a little formula that shows the average as well as the median here. And then we brought them over to a chart like this. Now this is all 100 plotted. Nothing's being skipped here. You can see the title of all coins from 1 to 100. The red line here is the actual market cap from 1 to 100. And then the yellow line is the average price return of those top 100 coins. The median is the green line's the median here of those top 100 coins, which basically is cutting off the top and the bottoms to remove outliers. And basically what we saw was a positive week that was slightly in the green. Coins, you'll notice the small cap coins, as is usually the case, had a little more volatility. And this time around, they were actually the winners of basically this week and had much better price returns on average than the top blockchains out there. Now, when you really factor in, Swipe, Golem, and some others that had negatives, you'll notice there's a little more risk involved. But if you were in small caps, you tended to do a little bit better because of coins like Hyperion, Komodo, Luna, ABBC, and some others that may not get the most attention. But because of Black Thursday and how much they fell, what we're seeing during these positive weeks where Bitcoin and Ethereum are stable is that the small cap tokens are able to start to rise and sort of come back to where they were before they were basically, hammered into the ground. And then switching over to the 90-day chart, we see, kind of a similar pattern, to be honest. It's covering both before Black Thursday and after, but you still see that the major winners were the ones that were in the small cap territory, but so were the major losers. So you'll see this very often, and as we update on a weekly or maybe a bi-weekly basis on the spreadsheet, it's usually going to be like this. Bitcoin, Ethereum, and some of the other top 10, top 20s are going to be relatively low and close to zero, whether on the upside or downside. And then the small caps are the ones that tend to explode. Now, I actually pulled up a few of them to take a look. And if we look at InSolar, it was basically all in one go. We went straight from about a price of 18 cents to a price of 31 cents. It actually peaked up at about $1.32. So that shows just how volatile this coin has been.
Yeah,
And
that looks like a totally organic pump, by the way.
Yeah, absolutely. Totally organic, nothing suspicious whatsoever. That's sarcasm, by the way, for everyone.
All good.
And we see, yeah, and then we see the daily active addresses here. If you happen to be checking in Solar, we had a pretty big spike of 2, 3, maybe even 4 lines here about 2 weeks before this big price. So if you are um, checking out some of the smaller caps daily active addresses, if it's an ERC20, tends to do well. And then we can look at some others. Nervos was another big one. This one was a little more gradual because, as I said, it was thrown so far down on Black Thursday. It's had time to basically recover all the way back to where it was at the beginning. One other one, Hyperion, we see that it's actually just exploding as we speak, and daily active addresses are actually supporting it. So I'm actually very interested in this one to see whether it can keep up and continue to surge. I highly doubt that this will go on for too much longer, just because of the sheer amount of price. It's basically doubled in about a week. Yeah. So we'll see if DAA is continuing to climb, which is kind of required for this move to continue. So I may actually give an update on Twitter or something if people are interested in this one.
What's the trading volume of this coin?
Trading volume of Hyperion.
Yeah, should be like somewhere below the chart, I think.
Well, you can actually just look at the graph here. Yeah. The trading volume was 4.4 million. Yeah.
Okay, so it's not too small. Interesting.
Yeah, it's not bad. Can you look at the tokenage consumed for it, Brian, also?
You bet.
So usually, like personally for me, these small coins are a kind of a Russian roulette. I mean, it's really super risky to trade these, and you can't be sure if some whale won't completely destroy the market. So yeah, it might be really, really risky to try to play these.
Oh yeah, completely. And you can see that this token age consumed spike here, the latest one, just happened, and our last one was even larger on March 14th, and that actually was right after Black Thursday, and that kind of ended the rebound temporarily that it was on. So we could see that this is the end of this big spike here, and after a couple hours, we'll see how this plays out. It'll be very quick.
Yeah, so for everyone that's not familiar with tokenage consumed and what it does, basically the spikes on the tokenage consumed chart indicate that coins, a considerable amount of coins that were previously inactive for a long time, basically did not move addresses at all, are now once again on the move. So if you see for Hyperion, but you'll see this for a bunch of coins if you go to Sandbase and check the tokenage consumed for different altcoins. Very often these spikes in tokenage consumed are precursors to increased volatility for the coin. So given that there's this massive spike in tokenage consumed just today as the coin is mooning, I don't know if it's an all-time high or just a 3 or 4 month high because we're looking at that specific time frame. But whenever you see this amount of this sort of spike in tokenage consumed during a pump, it's a good time to kind of reconsider your position if you have a position in this type of a coin, because it indicates that long-term holders, maybe even ICO investors, are starting to move their coins. And if there's a correlating spike in the amount of coins moving to exchanges, that's an additional validation that people are starting to sell, and you might want to get out.
Yeah, also the 30-day MVRV currently of this coin is at 37%, which usually is quite high. So yeah, I mean it could be quite risky to get to buy at this point, I suppose.
Am I looking at the right one here, Valentin? I'm actually seeing 1.49, even higher.
So it's yeah, so that means it's actually larger. Yeah, this is because I look into it on Grafana, and on Grafana we don't show the last point. But yeah, it's actually even higher. It's 49% positive. So yeah, which is all-time high. And the price seems to be like all-time high.
Yeah.
But it's also a fairly new coin. Yeah, like one of the problems with these small cap coins is that you can't really be sure whether they're not some kind of a scam or something. So yeah,
Right.
like for example, like here at the bottom, in order to buy there where the MVRV is good, you need to be really convinced that these guys are going to deliver something valuable, and it might be, you know, something that is going to be truly decentralized with true utility and all that. At this point, when the MVRV is already very high, it might be too late to buy because these
Right.
people are going to cash out.
Yeah, good point, Valentin. It's obviously it's important to know what the fundamental backing is behind some of these rises. And if it's something like an ERC20, like in Solaris, you could at least look at like the whale activity and things like that. But if it isn't, you're kind of confined to the more basic metrics. And oh, you know what? Actually, this one is an ERC20 because we have top.
Yeah, it is based on Ethereum, I think, but what is it for and why it's pumping? Like, yeah, not really.
Yeah,
clear.
difficult to say.
And given that it's still early, most probably there are people with a lot of cheap coins sitting in this market waiting for the right time to dump. And this is like, if you are not an initial ICO owner that got the coins for very cheap, it could be very risky to play out these until the market is shaken out from these cheap holders, cheap coins. Yeah.
Yeah. So Brian, when is this template is available to our Sandbase Pro subscribers, I assume?
Yeah, it's
Okay.
available now. The only thing I will say is, unlike the other templates, this one is manually updating. So I need to actually go in. I'll probably do it, you know, the day before our This Week in Crypto calls every week, and I'll make sure we have fresh data, so that people can check out what the percent changes were. If you would like it more often, you can always give us a ping, and I can give it a refresh just so you can do a quick check on this. Happy to do it. It's not really too tedious here.
Okay.
So
Cool.
yeah, just send us a ping if you're interested, and I'll give you guys a share to this this spreadsheet here, assuming you're a Sandbase Pro user. Cool. Other thing I wanted to show really quick is the social volume of Bitcoin. We spoke about this midweek when the price dropped to about 6,500. We saw a very large spike here. And generally, when we look at social volume, we're looking at when the crowd is starting to jump on the trend of the respective price direction. You'll see it here. The crowd started to jump on right when Bitcoin plummeted about 5 days ago to 6,700 after being at about 71 just a few hours before that. And right when that happened, the bottom basically sort of flattened out here and it eventually started to rise. When we saw this one, it was a larger plummet. Actually, no, I take that back. It was a smaller plummet, but the social volume spike remained high. And this one had a more rapid bounce and was supported even more as it was rising here. And that allowed the price to basically surge right back up to about 7,200 at a peak. And in general, the main purpose of these social volumes are to find when the price direction is reaching its end. And these spikes are basically the best ways to identify. Now, we use it more to catch tops in general, but it certainly works for bottoms too. And we found two good examples here over the past week on April 12th as well as April 15th. And then this one here that happened after the bounce, this one kind of looked like it might be the flattening of the top, which it sort of was, but it had a little more of a rise, which was surprising. So what we'll be looking for now is the next big move, whether it's up or down, when that social volume starts to support it, when the crowd jumps on the next price trend. Because right now it's kind of it's a very difficult time to decipher where Bitcoin is going from here. So depending on where it goes next, we'll want to see what the crowd reacts. But yeah, I just want to point out that social volume here is a very, very good tool that I encourage people to utilize, along with Maxim's example of including daily active addresses and transaction volume in their study of this, because when all three of them are going the same direction, it's a great midterm and long-term indicator of where prices are going, not just for Bitcoin, but for any asset.
And also, so on top of this, basically what you guys are seeing now is the results of messages collected from over 1,000 different crypto-specific social media channels that we track on Sandbase. This is for Bitcoin particularly, and then on our additional platform called graphs.santiment.net, there's also there are additional social metrics where we try and actually calculate the sentiment of the crowd related to a specific coin. So I was looking at it today, Brian, on graphs.sentiment. For Bitcoin specifically, it seems like even though the in the last couple of days the social volume is kind of declining overall, there seems to be, at least on several channels, including Telegram, a very bullish sort of move and a very bullish mood around Bitcoin in the past, let's say, 5 or 6 days. So if you can kind of select maybe the last 4 or 5 months, we can
Mm-hmm.
see that enveloping on the charts. I mean, it's not really that out of the ordinary for the Telegram crowd. I think out of all of the social channels, Telegram is usually the most bullish on pretty much anything. It's just a bunch of people screaming moon very often. But it's if you go to the last screen on this on these dashboards, yeah, there you go. So that's almost a 4 month high in the Bitcoin related sentiment, positive sentiment on Telegram. So it seems like for a specific subset of the crypto community, this latest move upward, although not nothing too crazy, relative to general crypto market tendencies, it seems like it's really awakened something in the parts of the crypto community, and the Lambo boys are coming out of the woodwork once again.
Yeah.
Well, it's very interesting that, just recap everything I've seen in the last days. Nobody is saying that Bitcoin is going to zero. I mean, I haven't seen this narrative for quite a long time, and usually it's between these two like extremes. But now with the pandemic and the crisis, mostly people are like, oh, like fiat is going to nowhere. Like they're trashing fiat, not trashing Bitcoin, which is kind of weird.
Yeah, I don't know. Like, I've seen at least on Twitter. Like, Brian, if you go to Twitter as a source, you'll see that on Twitter, I think they're still fairly, like, relatively negative towards Bitcoin. But I agree with you. Well, over the last couple of days, at least, I've seen more and more sort of the same type of statements as you saw maybe 5 months ago, as like you never expected Bitcoin to reach 16,000. You'll never expect the next bull run, which is coming any day now, stuff like that. It seems like on average, the crowd is warming up to the prospect of a bull run once again. Like, even though here on Twitter you can see that the general sort of trend or sentiment towards Bitcoin is still in the negative, it's almost breaching the neutral level, meaning the equal distribution of positive and negative messages towards Bitcoin on Twitter. So overall, even though Twitter has been kind of bearish on Bitcoin ever since the drop, now it's kind of starting to warm up to it once again.
It's interesting to see the contrast between Telegram and Twitter, where Telegram is kind of up here right now and looking pretty positive, and Twitter is in basically a almost month-long negative sentiment trend for Bitcoin, and we'll see when this zero line crosses. But in general, I was looking at Telegram as you were talking about it, and they've done a really good predictive job, actually. In terms of seeing where prices are going to go next. It peaked here right around January 3rd or 4th, and over the next 2 weeks after that, it just continued to rise, and then vice versa. They were kind of the first ones to go very negative before the actual drop happened when we were at about 9,000, and then it happened about a week after that. So, I guess we can say that the Telegram is looking like a pretty predictive overall platform. Well, if you believe in just this last 4-month snapshot, at least, and it's interesting to see this and how they all compare over time.
Yeah, I mean, it depends from coin to coin, I think. But yeah, for the last couple of months at least, Telegram seems to have been on point. Well, you wanted to mention something?
Yeah, like I think that this metric here, it's interesting when you look at the extreme values. And that this is so-called z-score, which the further it is close to these dashed lines, the more extreme the metric is. So if it touches the dash line, where it's like the -3, that means that we are in a very extremely polarized. If we are close to -1, this is not so much extraordinary. Like, consider it to be like not going very extreme in either direction. So I think this metric is mostly valuable when you look at the really like the big extremes.
Yeah.
Like maybe, when it's above 1 or below -1, even if it's below -2 or above -2, that's even more.
Yeah.
It's a kind of a similar to the MVRV, where when you see real extreme values, then you kind of start thinking, okay, like here it's something that I need to pay attention to.
Yeah, I actually have a pretty good example of this. Maybe, I don't know, maybe we can do it briefly later because it entails, it covers BNB. But before we go to Binance Coin, I just generally wanted to spend a little bit of time talking about Ethereum, and then we'll go back to Binance Coin, and the social sentiment for BNB on Twitter seems to have been very much on point. I'll share that in a bit. But before that, let's briefly talk about Ethereum. So if you guys have been, reading our insights over on insights.sentiment.net, there's this article that we published a few days ago. So now it's 2 days old now, saying that we think that the new wave of volatility might be coming to Ethereum. So this is something that I wrote based on the discussion I had with Max. Max, you're on the call, right?
Right.
Yes.
I am on the call, yeah.
Okay, cool. So basically, we were looking at a variety of charts of ours, not just including Ethereum, but also looking at stable coins and looking at what different decentralized finance projects, particularly MakerDAO, were doing. And there seems to have been, over the last month or so, a lot of market indecision overall. So we started by just showing the amount of the market cap of the two biggest stable coins booming, even though the general crypto market is still nowhere near. But when we're talking about stable coins in particular, this has been a very big talking point for the crypto pundits and news media over the last couple of weeks. The fact is, and the fact remains, that on average, more and more people are starting or seem to be moving their coins to stablecoins. The biggest spike in stablecoins market cap has kind of been around the Black Thursday, when the reasoning here that most people give is just people seem to be moving their crypto assets into more or less volatile alternatives and trying to kind of sit on the sidelines of the market until things calm down. And we were revisiting this to see if this still holds true. So here, for example, what you're looking at is the total balance, or the total collective amount of USDT that is held by the biggest 100 wallets holding Tether. And you can see that they've actually added more than 500, so more than basically $500 million USDT, so more than $500 million since the crash. So this is the Black Thursday, and then this is a few days ago. Now I checked it again today. This number actually bumped to 620 million USDT in the last month alone. So it seems that on average the whales are still not necessarily moving their stable coins back to exchanges and back to trading. It seems that they're content with accumulating for the time being. And we're seeing a very similar trend with the second biggest stable coin of them all, USDC, where over $120 million or 120 million USDC has been added by the top whales since the crash. So this is sort of was the first sign of ours that market is still somewhat undecided and not really, and has been for a long time now. Actually, for the crypto markets, this period of indecision is fairly long. It's not something that I think the crypto market is used to. And then we're also looking at the amount of debt created on the MakerDAO platform. So over the last couple of weeks, we've actually seen it kind of flatten out, which essentially this is the amount of DAI issued by the MakerDAO system, which Max mentioned that not obviously this is due to a lot of different things. I don't think it's just it's reflective of the entire DeFi ecosystem, because MakerDAO has had quite a few problems and obstacles, not to call them scandals, over the last couple of weeks with the debt bubble that appeared after the crash, and the DSR rate being slashed to zero. So there's more than one reason why this MCD, the amount of debt created on the MakerDAO system, is tanking. But the fact that it's tanking also means that there's less DAI being moved into perhaps leverage long positions, at least for the time being. And then we've also seen just we've seen the lethargy among the social crowd, crypto specific social crowd overall. So here, for example, we're looking at the amount of mentions of things like buy, bought, or bullish, which are at a month low. So you can see this major spike in the sort of positive keywords on crypto social media right around the drop. But since then, it's fairly, it's been hovering at around a month low now. The same thing is for the sell words as well. So it's not like one sentiment is prevailing over the other. It's more like the entire market is kind of getting exhausted at this point. And in general, this particular chart is showing the amount of mentions of Ethereum in crypto social media overall, which has also been in a decline ever since the Black Thursday event. So these several sort of charts from different perspectives and different stakeholders were kind of first signs that the market has been undecided and uncommitted for a fairly a prolonged amount of time, which usually in the past has kind of contributed to a spike in volatility. So next to this sort of general indecision by the market, we were also finding some major shifts in the behavior of big Ethereum stakeholders, which I think also contributed to this latest spike of 11%. So basically what I'm saying is that we kind of predicted this 11% spike, or the general spike in volatility, by looking at these various metrics. So one of them being the behavior of Ethereum miners, which has also went from, dumping right here. So basically, this is the first time when Ethereum went above 170. It was the first time in more than 2 months that Ethereum miners started selling again. However, since then, over the last week or so, we have seen them start accumulating once again. And it's not just the Ethereum miners that are making this sort of behavioral shift in the short term. It's also the Ethereum whales. It's pretty much the same behavior here. We're looking at the top 100 addresses that are holding Ethereum. And we can see that from March 1st to March 7th, they've pretty much dumped around 500,000 or even more, maybe 600,000 Ethereum. They've moved over 600,000 Ethereum from their bags. But then ever since Ethereum went below 160, they've started accumulating again. So we're seeing these sort of paradigm shifts on the market, which indicates that, things are starting to happen once again, and the major market stakeholders are starting to behave in a different way. And finally, the last sort of volatility marker that we mentioned in this article is this spike in token age consumed. So as we discussed just a minute ago, token age consumed and the spikes in token age consumed mean that previously dormant coins that have been inactive for a fairly long amount of time, are now starting to move hands again. And very often, you can check that on our charts for Ethereum. You'll see that very often the spikes in token age consumed for Ethereum have correlated with changes in the price of a coin. Even on this chart for the last couple of months, you can see this latest spike in token age consumed pretty much came at the local bottom before the rise, and then this one in a similar fashion kind of kickstarted the rally, and obviously you can see these major spikes right around the market collapse. So the fact that we're now seeing the same pattern start to reappear, and the more and more long-term holders starting to move Ethereum away from their wallets has also been one of the bearers of volatility for Ethereum. So based on this sort of conglomerate of different metrics from different angles, we wrote an article saying that we think that the fact that the market has been uncommitted for so long, combined with all of these different volatility markers, might indicate that Ethereum is going to burst one way or another in the very near future. And sure enough, maybe what is it, like 12 hours after this article went out, Ethereum has gained over 12% in about 12-hour time. Let me just check on the graphs. So pretty much this is where we wrote it, as Ethereum was kind of consolidating, and then bam, as quick as that. So just a sort of a general overview of how you can use Sandbase and Sand data from different perspectives to figure out, what the market might be thinking about at any given moment and where it might go next. Max, did you want to add something to this analysis?
No, it's okay.
Okay, but speaking of Ethereum, one other thing that I wanted to mention. So I was talking about miner balances and how miners have started accumulating once again. In the last day or so, we've now seen once again small sell-offs against miners. And now I think, seeing this pattern reoccur, I'm thinking that the 170 level is kind of, probably a resistance level for the miners. I don't know if they're like running trading algorithms and they have a sell point or something that they're not deviating from, but it's pretty much the same behavior that we've seen in the last Ethereum run above 170. So right as the Ethereum was moving above 170, almost, what is this, like 100,000 Ethereum have started moving, and then we're seeing the same behavior by miners since the last move above 170. So I don't know, guys, do you think that this might be a danger zone for miners, or that miners don't think that we're...
I think it's as simple as double top, because we've been recently there and just market moved fast and they're still concerned, or miners is a group which have to finance themselves regularly. So if they believe strongly the price will increase over time, over the next 1 to 3 weeks, they can keep it. If they have some level of concerns and they need to finance it, they will sell it. So for them, it's quite clear. They see, okay, 170, God knows if we will get past 200. And this is a big group. So, and you know what I will say next, yeah?
Yeah.
Okay, so I don't say. Yeah, and we moved very fast and hit 170, and they say, okay, there is no follow through in one day. Yeah, let's dump a little bit just to make sure, that we have enough money. That's it. It's as simple as this.
If you see what kind of drop in miner balance from February, we've seen while the price was growing, to be quite small. But also keep in mind that this drop in price that we reached at 170, it was actually something that we also kind of predicted. I actually posted this on Twitter about the MVRV that we were experiencing at the last 170.
Oh, yep.
It just grew too quickly. Like the price grew too quickly, and there were participants that were having too much profit at that point. You can see the pink line. It went way too high, and that required to have a correction. Right now, we are at lower levels of this MVRV, so that's scary. So I would say that me, this kind of drop in minor balance doesn't seem to be too warning at the moment.
And yeah, you were, by the way, Val, you were talking about the MVRV ratio for the 30-day holders, so basically short-term holders, kind of peaking at around 122, 123, which historically has been kind of a danger zone for Ethereum's price. And it seems like at around 20 to 25% profit, short-term holders are usually content with starting to sell off some of their bags. And so in the last couple of days alone, we've seen this move around 120 almost once again. And it appears that in the last couple of days, the market has already once again corrected for these sort of slightly elevated levels of MVRV, would you say?
It seems like so. Still, we sit at like 19 or 16 at the moment, or something. 16% right now. So we're gonna see what is going to happen at these price levels. But if we jump percent from here really quickly, I don't know, almost reaching 200, and the MVRV goes below, like over or something like this, then I will be really concerned. But at this level seems to be not so dangerous. And I guess if it really increases like 10 or 15% more, think much harder, like most probably.
Okay. Yeah, so guys, you can check out the MVRV and minor balances for Ethereum, as well as MVRV for pretty much all ERC20 coins, Ethereum, and Bitcoin, and a number of other coins as well. You can check all of them on Sandbase. With the Sandbase Pro subscription, you get full-time access to both historical and present-day data for all of these metrics on the left side. So one final topic that I wanted to briefly touch upon, guys, for this week's call is Binance. So on a few days ago, we've seen Binance start to tease this sort of new announcement. Something's going on with my Twitter. We've seen Binance start to tease this Evolve thing a few days ago on their Twitter channel. So let me try and find the tweet so everybody knows what I'm talking about. Yeah, I think it was, no, this is the actual announcement, but there was a few days ago, there was just the a GIF, there we go. So no text and just, it said evolve, right? So people were already trying to figure out, what's happening, what is Binance, because Binance just maybe 2 weeks ago made a huge bombshell acquisition of CoinMarketCap for it seems the rumored price is around $400 million. So the question was, what is next for Binance? And it seems that now we have the answer. Val, you were already kind of dishing on this announcement. Do you want to kind of go over what they actually announced today?
Yeah, so I haven't really read like white papers or whatever. They're announcing that they're going to put smart contracts on top of their blockchain, which is virtual machine of Ethereum. And, they want, obviously, developers to build smart contracts on top of their blockchain. Now, I'm really highly skeptical about this news. And the main reason is that far shows that their blockchain is on-chain data shows that there is not much activity happening on it. And second, it's not open source. And this is one of the, I think, biggest obstacles out there. I mean, right now it's written there that it's going to be open source, but if you go on their GitHub, they only provide binary compiled binaries for their full nodes. There is no open source of their full node, and this is a big problem. Like some people were comparing to competitor to Ethereum, which is really crazy. given that it's not even open source. You can't really have Ethereum that's not open source. Really, like we're gonna see, but they have a lot of space to catch up here. Like to be a real competitor of Ethereum, you attract a lot of developers, development activity analytics that we do that. Even blockchains like EOS that are open source, that has been around for more than a year and has been pouring enormous amount of money trying to attract developers, they have just a fraction of the development activity that we see on Ethereum. So seems like money can't really buy you development activity and community and all that. So they have a lot of space to catch up.
Yeah.
And yeah, we're gonna see what's gonna happen.
Well, whether this is actually going to become anything or if it's just vaporware, it doesn't really necessarily matter for a lot of people, as long as there might be an opportunity to buy Binance Coin and for BNB to rise. So I was looking at the on-chain and social data for Binance Coin in kind of in the anticipation of the announcement and after the announcement. So, for example, let's start with the social volume. We can see it already. So over the past, what is it, like maybe 12 hours, we've seen this massive spike in the amount of mentions for BNB in particular, because I assume that I haven't yet still read the white paper, but it already says that BNB staking is going to be involved. So it seems like a lot of people are already convinced that BNB is going to profit, so to speak, from this news. So we still haven't seen BNB appear on our list of emerging trends, meaning that it's one of the most talked about topics on crypto social media. Once we do see it appear on that list, it's usually a sign that the coin is going to dump fairly quickly because the hype has reached its peak. However, for now, this is a first sort of yellow flag that something might be, in the price of BNB might be poised for a retraction. There's another thing that might indicate that heightened volatility is coming from BNB, and I wrote about this yesterday. And this is the spike in tokenage consumed as well. So pretty much in line with the announcement, we have seen this major spike in the so old coins that have not been moved for a long amount of time starting to be moved again. And we wrote about it yesterday. We actually were able to track the exact transaction that this is probably the culprit for this particular spike. So on Sand Data, you can track the top transactions for BNB across the specific time frame. So we were looking at the last 24 hours, and this one transaction there was over 1 million BNB sent to this particular address yesterday, which is probably the reason why we're seeing this spike in the tokenage consumed. So yesterday we saw this address receive over 1 million BNB. So currently it holds around 17 million BNB, and it has received this amount from this particular address, I think. Yeah, which has actually gotten most of its Binance coins 186 days ago. So in these two transactions, you can see that this is already 1 million BNB, being added to this address 186 days ago. So basically, somebody seems to be moving a large portion of its coins to another address, whether that's in anticipation of a move or something else. It's probably too early to tell, but as I mentioned, these spikes in tokenage consumed, they are usually very indicative of a heightened volatility coming for the coin. So if I were, invested in BNB, the spike in tokenage consumed as well as the overall rise in social volume might be two fairly significant yellow flags for the coin's short-term action, at least. And we were talking about the predictive power of our sentiment, right? So I wanted to show you guys what the BNB charts look like, because it's actually quite interesting how the Twitter crowd was on point several times in the past as far as predicting the pumps for Binance Coin in particular. So if we look at the, let's say the last, maybe the last 6 months. So here we're going to look at the social sentiment towards BNB on Twitter in particular. Yep, and actually let me just maybe include this last spike as well. So yeah, so there we go. These are the last 3 spikes in the so the last 3 times that crypto Twitter has become bullish or turned bullish towards BNB in the last 6 months or so. And as you can see, Val mentioned that the real value of this metric is when you see these spikes go above one standard deviation. So these 3 times this rule has been satisfied, and every time that the crypto Twitter has gone extremely bullish towards BNB, it was pretty much a local bottom and the start of the rally. So here, right around the bottom, we saw the bullish sentiment towards BNB spike into this prolonged rally. Same thing here before the February top, and then around the local bottom before the market crash, crypto Twitter was once again fairly bullish on BNB, and it started rising again. So quite interesting, right? 3 times 3, very effective top predictions for crypto Twitter as far as BNB is concerned. Maybe look a bit outside. We'll find one place where they were wrong. No, even here. Well, actually, yeah, here they went bearish before the spike. But yeah, so Val, would you say that this is maybe a good way to use this metric? So anytime that it goes above 1, that's probably a signal to keep track on what's going to happen to the price.
Like I would be really curious to see what was going on around these bumps there.
Mm-hmm.
I mean, this could be an indication for event happening on these days. Exchange offerings, some significant news around Binance, but yeah, I would be really curious to know more about what happened around these periods.
Yep.
In conclusion.
Yeah. So just an interesting thing that I wanted to bring up as far as the potential power of this sentiment algorithm and how very often the crowd can actually be on point. So I think that's going to do it for today, guys. As I mentioned, most of the talk today was focused on 3 coins: Bitcoin, Ethereum, and BNB. If you guys are interested in any additional sort of altcoins that you would like us to cover in one of these, future videos, let us know. Also jump on our Discord, because we talk about this stuff pretty much every day. And if you have a topic that you would like us to cover in the next week's edition, just let us know a day in advance so we can prepare, a few charts, figure out what the hell is going on chain and social, and in social data, and we'll analyze it live on air. So until next week, I would like to thank everybody that has joined this call. I would like to thank in particular Brian and Val for sharing some of their insights on the last week's market dealings. And I guess we'll talk to all of you next week.
Yeah, thank you very much.
Yeah, thank you guys.
Thank you guys.
The next
Yeah,
week.
bye.